So having completed our works orders, we can look at the stock effects of that. And if we stay with our 8-inch stainless pan base, we see that we now have a quantity of 100 in stock. So how have we got there? Well, if we look at the activity report, we can see that we did indeed put 1100 into stock against the first works order we looked at there, works order number 4, and we also know that we scrapped 10 on that same works order completion. But of course we then used 1000 of those bases, and this was against works order number 2, clearly for the production of the final assembly. And if we look at that, and that would be an 8-inch stainless pan, we see that 1000 were produced and received into stock from works order number 2. So with finished goods in stock, we can begin to complete the cycle. And if we go back to our original sales order, we can first of all generate a picking or packing list. And let's see all the items that are due to go out by the second week in July. And that indeed is our first delivery of 8-inch stainless pans to Dell Engineering, due out on the 9th of July. We can generate a picking note for that. The picking note is in fact in 2 parts, one for issue to whoever it is that's actually going to physically do the picking and packing of the goods, and a control copy that's retained in the office. So with the picking note coming back into the office, confirming that the goods have indeed been picked and packed ready to go, we can actually now dispatch the goods and create the invoice and delivery notes. That is the item. The picking note has indeed confirmed that there are 100 to be delivered. And so here we see our invoice. This is flagged to print. We can email this directly to the customer should we wish, and provided we have the customer's email address on file. And we simply send that document. And at this point we get invoice, a customer copy of the delivery note, and our own copy, which of course will be signed by the customer or his or her agent and retained as proof of delivery. And finally, whilst we've been running our operation, the application has been keeping score, as it were. This is a real-time accounting system, so as we process items through our operation, we do in fact create financial transactions in the background. And for today, we can see that that was indeed our sales figure, £680 against sales invoice number 1. That is the stock value of the cost of those sales. We see that £21,587 worth of material was issued to production to produce £21,552 worth of goods. Well, yes, that's absolutely right. We know that we did in fact use some additional material on one of the works orders that we looked at, so that's created an unfavourable production variance there of £35. There's also been a stock adjustment, and that of course is the material that was scrapped against works order number 4. But nevertheless, when we look at the report for the operation, despite these unfavourable variances, we do see that we have in fact managed to make a gross profit on those sales. And of course this would be pre-overhead costs. Of course, in this brief demonstration we've only covered a fraction of what the application can do, but I hope that it's been enough to give you a better understanding of ERP systems generally and central accounting in particular. For further information, please go to centralaccounting.co.uk. Thank you very much for your time.